The broadcast is now starting. All attendees are in listen-only mode.
Welcome everyone to the AbleSys webinar. Ron here, and I'll be glad to answer your questions and go over the charts. We'll take a look at what the signal said recently, and today we'll look at the E-minis today, and we'll take a look at this stock chart here. This is a daily, weekly stock chart, PANW, popular stock that people like to trade. And the software is going to work the same whether you trade futures or stocks or Forex. It just doesn't matter whether you do day trading, a swing, or longer term trading. It's all the same, and that's helpful, because most people like to diversify and trade different things. So here's what the signal said on this particular chart, and the way we read this chart or interpret this chart is the exact same way we're going to interpret day trading charts and stock charts and E-minis and all kinds of charts. It just really doesn't matter. It's always the exact same rules, colors, dots, and X's. Everything's the same. Stop losses, everything's the same. So let's jump in and take a look. Triple confirmation is what we need. We want to have triple confirmation. What does that mean? Because we want to stack the odds in our favor. We want a red bar, a red dot, and a red X. The dots of the daily chart, or the lower time frame, whatever two time frames you're using, and the X's are the higher time frame. This is in this particular chart, it's a daily, weekly stock chart. So right there is where we've got the combination of a red bar, because red means down, a red small dot, which is a daily resistance point, blocks the price from going lower. It's red, so it also means down, and a red X. Well, that's the weekly chart agreeing, and that also means down. So we've got triple confirmation to the downside, and usually on the longer term charts. Now you could use the 3 green bar exit, and I've got a little modification to that. That's very helpful. I'm going to go over that in a minute when we come up with an example of that. But otherwise, we're stopped out, or we're going to put our stop losses a little bit above these red dots, and we go to the previous higher row of small red dots. So right there would be the previous higher row where we'd be stopped out. So it'd be out over here at about 182, and we got in at 212. So that's a 40-point winner, especially if you're trading put options. That would have worked out real nice. Now, a lot of people say, oh, do we get in here? You got blue bars and blue dots. No, we don't have the blue X. You've got to have 3 indicators to agree. All 3 have to agree, like right here. That's a triple confirmation buy signal. So after the big down move, the big signal there, big winning trade down move, now we're on the way up. Blue bar, blue dot. And by the way, nothing in here was a trade. We didn't have the combination of the 3 indicators, blue bar, blue dot, blue X, meaning lower time frame, higher time frame, and 3 separate indicators on the daily chart all agree. That's nice. That's the odds stacked in our favor. Definitely going to be losing trades. I guarantee you that, especially when you're doing short-term scalping, day trading. It's only normal, especially in a choppy sideways market. We're going to definitely have some losing trades. The nice part is that we won't get beat up because we got stop losses close enough. By the way, let me get back to this trade here. Stop loss goes, a penny or 2 above. You can just put it anywhere you like, but it has to go just slightly above the top of the red bar. If you're trading E-minis, you can go like a half a point, just slightly above. Where does the stop loss go here? It goes on the bottom of the blue bar, and again, a couple of pennies, and this is stocks. A couple of pennies below, we're actually stopped out in the very next trade. Nothing you can do about that. We're stopped out. Very next day, we got stopped out. We only lost, like 2 points on the trade, but valid trade, got stopped out. Okay, so, where do we get back in again? Well, we're going to get back in on a sweet spot. And on this particular one, we've got to wait till it gets right about up there. And then it took off from there. But this is the point I wanted to make. Well, you know what? Let me get back to it. Let me get over to an E-mini chart. This is the point I want to make on the 3 green bar exit. Do you see how this would be the 3rd green bar? Because obviously that's a buy signal right there. Goes up. Put your stop loss, give it a little bit extra room under the 3rd green bar. Instead of automatically getting out on the 3rd green bar, the close of the 3rd green bar, we're finding that if you put your stop loss, in other words, instead of getting out there, let's move our stop loss 1 point under, this is an NQ chart, NQ E-mini, Let's move it up 1 point under the under the green bar. You know what? We wind up catching this whole big move. Because what's been happening, and we're trying to avoid that, and believe me, it's a very difficult to try and balance risk and reward. It's tough. It's not easy. But that's what AbleTrend helps us for. So instead of just automatically getting out on the third green bar exit, we're going to put our stop loss 1 point below the bottom of the green bar. You know what? We wouldn't have been out on this one, and then we would have caught this trade right here. We'd have been out. Actually, we would have put our stop loss on. There's your third green bar. Again, put your stop loss 1 point below. We still don't get out, but we do finally get stopped out right here on the previous lower blue dots. My point, we wound up picking up an extra 7 points by doing it this way instead of just automatically getting out on the 3 green bar exit. You're putting your stop loss 1 point under the green bar instead of exiting automatically at that point. And of course, the opposite is true when we're short. We would put it at the top of the green bar when you get that third green bar in a row. Let me see if I could find an example. Yeah, okay, here's an example where we would be short on this trade. Stop loss would go, just a half a point above the top of that red bar. Here's 1, 2, 3. There's your third green bar. We're just going to put the stop loss, instead of exiting right there, we're going to put the stop loss 1 point above the top of that green bar, and we'd be out right there anyhow. We gave up an extra half a point. So we gave up a half a point here, but we picked up 7 points here because we never got out. See what's happening? Sometimes you get the 3 green bars, and then it turns to blue and goes back up again, and you go, oh man, I missed this whole big move. Well, you know what? If you put your stop loss 1 point below the green bar, you know what? You would have caught 7 more points out of this trade. So that's the point of that. You pick up 7 more points out of that trade. And we're finding that, you know what? It happened a couple times yesterday in testing it, and a couple times today where we picked up a little extra money. Now, first trade of the day was right here at the 9:30 New York Open, 6:30 Pacific. However, that's a hard one to pick up because it's right exactly at the open. Totally understand that. Some people like to wait a minute or two, a couple of minutes, something. Totally understand. Here's a sweet spot. It got within a half a point of the small blue dot below. I'm going to call that okay. That's okay. I mean, ideally we like it to touch the blue dot, but you get within a half a point. I mean, we can't get overly technical, otherwise we're going to miss out on some trades. So at the close of that blue bar, we've got blue bar, blue dot, blue X. And this one worked out nice because there's your third green bar exit, but we're not going to exit again. Remember, we're just going to put the stop loss 1 point under the bottom of that green bar. Well, as it turns out, we'd have been out over here anyhow because we'd have been stopped out. So we got out basically the same spot. We gave up maybe about another half a point on that trade. But the point is we got in over here and we got out over there. Now we picked up 6 points on that trade. Ken, good idea. Point, not tick. Yeah, we're going with a point, Ken, just to give it a little room to breathe. Martin, can you go back to the first chart when you showed the long entry that got stopped out? You said not to enter together. Why not re-enter on the next 2 blue bars? You know what? I've been playing around with some of the rules here, always trying to make them better. I literally wake up in the middle of the night thinking about this stuff. I'm not just saying that too, because I wouldn't say it if I didn't mean that. But I'm just constantly always trying to balance risk and reward. Don't want to get too risky, but I don't want to have too much give back, but I want to catch the trends. So it's like, oh my God, that's a tough one to pull off. But I'm always trying. Skip, 1 point away from the third green bar for both ES and NQ. Yes, exactly. Sydney, but it looks like the next green bar was lower than the third green bar. I don't know what you mean, Sid. I'm not sure which example, but let me just repeat. Just put it 1 point below the bottom of the green bar. 1 point below the bottom of the green bar. So here's the third green bar. Remember, it's got to be the third green bar. We're looking for the 3 green bars in a row. That gives us the heads up. The trend's getting weak. Normally, we would just automatically exit at the close of the third green bar. We've been talking about that one for months. Now what I'm saying to try and make it even a little bit better is just put your stop loss 1 point below the bottom of that green bar, because then often it goes back up again and you can you can catch a lot. You can catch a continuation trade. Okay, there's a valid sweet spot right there. We lost a couple points on that trade. That's a valid sweet spot. The prices went right back up to the red dots, came back down. Again, the bars go from green to blue, green to red. That's a valid sweet spot right there. Stop loss is right there. We're stopped out. Stop loss on the sweet spots go at the second higher row of small red dots. We're rolling right along over here. This would be a valid trade right here. Stop, triple confirmation. Top of the red bar. There's your third green bar that we talked about. Put your stop loss at the top of that green bar. As it turns out, it started to go back up again, but then we did get stopped out there anyhow. So lost a couple points on that trade. Today was a really choppy day. It was a tough day. But that's the kind of days I like to test AbleTrend on, or any indicator for that matter. You know, when it's straight up or down, everything wins. Okay, this is a nice one right there. You know, buy signal. Again, this is that good example I mentioned before. Here's your third green bar where we would normally automatically get out. We're going to put the stop loss just a point below the bottom of that green bar, because just if it goes down a little more, then we will be out. But sometimes, you know what? Like this happened right here, it pops back up again. It's like, nice. So I didn't get out over here where we normally would, and I wound up picking up an extra 7 points on that trade. Sweet. That worked out great. Okay, here's a trade right here coming in. Obvious trade. Bottom of the blue bar goes the stop loss, a tick below. To half a point we go. Let's see how we did on this one. Starting to go up. It's coming back down. Up, there's the third green bar where we'd normally be out right away. Just put your stop loss a point below the bottom of that bar. So we've been right around 26. Stopped out. Okay, actually a bar or two later we were stopped out. That's okay. We picked up about 4 points on that trade. Tom, NQH9 is the exact same thing as NQ space pound 9, as pound F is actually what this is. I use a different data feed. I use the eSignal data feed. It's a couple of $100 per month, but it's the highest quality. If you've got Infinity, stay with it. It's free. You save $2,000 a year. Sid, I tested the system and had, after 20 trades, I only had 7 winners, three scratches or 3 break-evens, and 10 losers on the E-mini after 20 trades, and you made $495 on one contract. It's beautiful, Sid. Great job. Sweet. Love to hear that. That's the key with AbleTrend. You're going to get a lot of trades. You're going to get, sometimes even more losers than winners, but and you have your losing trades at, a couple of points and your winning trades at 5 or 10 points, well, obviously, you don't need that many winners to come out ahead. So there's a good example. Thanks for saying that, Sid. Thank you, sir. Okay, there's another, no, this was in the dead zone. Remember, dead zone is from 12:30 to 2 Eastern, no trades. 12:30 to 2, no trades. 9 out of 10 times, it's flat, and you would have broke even anyhow. So we're going to just leave that alone. Between 12:30 and 2 Eastern, that's what we call the dead zone. We're not going to touch it. Now, next time you get a sweet spot or a valid trade, we will. Here's the sweet spot right here. And it's right after the dead zone, what we would say is 2 o'clock. There's your trade. Now, on sweet spots, we put the stop loss at the previous highest small red dot, which is right there. There's your third green bar. Just put the stop loss 1 point above that green bar, and we actually gave back an extra point on that trade. But it was a break-even. It was a break-even. There's one of your scratches. Break-even trade because we're out right there. Back in again on the sweet spot. That's a valid sweet spot. Out on the blue bar with the blue dot, we lost a point on that trade. Tom says, can you open up your indicators to show your setup? It's the exact same indicators, Tom, as I email to you and as I use every day for 15 years now. TS on the lower, TS on the upper. I also put trend sig, but quite frankly, you don't need it. So TS on the lower, TS on the upper. That's it. Keep it simple. Just like I've been saying to you. There's your triple confirmation sell signal. I don't like that trade because it's a long bar, but got to take it. Stop loss at the top of the red bar. out on the blue bar, blue dot. Lost a couple points on that trade. Obvious no trade zone. Now it got really ugly right in here. That's a valid trade. That's a valid sell signal. And we've been stopped out. We lost 4 points on that trade. Same thing, no trade here, obvious no trade zone. That's another triple confirmation sell signal right at the end of the day, which has been really good. Wasn't so good today. Lost a couple more points there because we got stopped out. It went above the top of the red bar. However, finally, at the end of the day, we did have a nice triple confirmation trade. But here's another example of putting your stop loss 1 point above, which would be right about there. And it turns out you did not get picked out on that trade. It turns out it missed it by like a one tick, and we did not get stopped out. So that worked out good. And there's the 4 o'clock trade. We don't trade after 4 o'clock. We always exit at 4 o'clock Eastern. So right there. Now so that worked out good. We picked up 8 points at the end. Cleaned up a couple of these. Cleaned up these 2 4-point losses with this 8-point winner at the end. Actually, at the end of the day, we lost a couple of points by the end of the day. It was a really choppy, ugly day. Fortunately, we've got the guidance chart with the 2 time frames together, and it kept us out of a lot of trades today. Otherwise, we really would have gotten crushed if we didn't have an AbleTrend guidance chart today. It would have really ugly, because I actually had a couple of calls from some clients who never had AbleTrend, and they were looking into it. The reason they did is they said they were using some other indicators. What I didn't ask, it's none of my business. They said they were just using other indicators, and they got totally killed today. I says, well, we didn't have a winning day either, but we didn't get totally killed. It was just a losing day because of the really difficult erratic price action, which unfortunately nobody can do anything about. But the price action, really, Mike said, oh, good, thank you, Mike, for saying this. Mike says more losers than winners today, and still broke even. Exactly, and that's the key. On an ugly, choppy, terrible price action kind of day like today, if you broke even or even lost a few points, you did fantastic. So 1 tick on each of the NS3 green bar turbo strategy. Yes, Mike, you got it, Mike Z. That's correct. 1 tick above the green, the third green, or below the bottom, or below, on the bottom of the third green going long, and it just gives you a little. Sometimes, like we even talked about yesterday. Sometimes, you know what? You catch a little prayer right there, and it keeps on going in that direction, and for just a little bit of risk. Yes, Mike, that's correct. Great learning day, Mike M. I got Mike M and Mike Z chiming in at the same time. All right, thanks everyone. Got to run. Hope I was helpful. Stay in touch. Anything I can do for you, believe me, I'll do everything I can. You're welcome, everyone. Mike and Sid and everybody saying thank you. Thank you. Good night, everyone.